Meanwhile, turning to the economy and that disappointing new report on inflation. Consumer prices surged a bit higher than expected in March, rising 3.5% from a year ago. That news rattled Wall Street. The Dow dropped more than 400 points yesterday. So what does it all mean for your wallet? NBC's business correspondent, Cheung, joins us now. So, Brian, I mean, these numbers were a bit higher than expected. Do we know why it remains so stubborn, and where are we feeling it the most?
Yeah, good morning, guys. The report yesterday showing that prices are rising as consumers continue to buy goods and services, and companies are trying to take advantage of that by rising prices. Now, where we've seen most of the inflation, it's happening in places like housing. It's happening in places like energy, where gasoline prices at the pump have been up by about a quarter over just the last month. Food prices also up. These are yearly rates of change that we're seeing here. The problem is that if you think about housing, right, we can't solve the housing supply issue in a short amount of time. But either way, you take a look at that yearly rate of inflation, it's been bouncing just north of 3% for the last few months. That's certainly something that's concerning because we had hoped that that would be a little bit lower by this point.
And the Fed had been raising interest rates to try to bring inflation down. It was trending in the right direction. They want to be at 2%. And there was hope that there would be perhaps some rate cuts this year. Now, how does this put a wrinkle in those plans?
Yeah, well, the Federal Reserve had been aggressively raising interest rates to try to take some steam out of high inflation. That appeared to work because we have to remember inflation did peak at around 9% in the summer of 2022. So, yes, 3.5% is not necessarily mission accomplished, but it's better than that. So the Federal Reserve has been holding those interest rates high. The question is, could they start to cut interest rates? That was the conversation going into this year. Now, here we are in April. The inflation numbers have basically been going sideways for the last few months. So that has staved off expectations for an interest rate cut. Markets now pricing in that it might not happen until perhaps in the fall. We had been expecting prior to yesterday's report, maybe it would happen in June. Investors saying, maybe not so much after that disappointing report.
Is there a sliver of good news here? Any good news surrounding this?
Well, on the inflation, on the interest rate side of things, because the Fed's not going to be cutting, that's not going to offer any sort of relief, at least in the medium term, on things like your credit card rates, on things like your mortgage rates. But we have seen things fall in prices, airline fares, used cars and trucks, dairy products. You remember eggs this time last year? They were skyrocketing. So those prices are down compared to this time last year as well. And one other thing I want to point out, wages are outpacing inflation. That's certainly good news for those households that are experiencing that.
All right. Brian, Cheung, Brian, thanks as always, buddy.
Hey, thanks for watching. Don't miss the Today Show every weekday at 11 a.m. Eastern, 8 Pacific on our streaming channel, Today All Day. To watch, head to today.com/allday or click the link right here.